Okay, hello everyone watching the recording. Hello everyone live. Nice that you're here. Today I want to cover some topics, and as always, after you have some time to ask your questions. First of all, he's not here yet, but maybe we give him some more time because someone asked about ranges and Fibs and all that. Let's do this in the end, because maybe he's able to attend to it live. So I will postpone this topic and start with currency rotations, which is a very interesting topic, not from a week-to-week performance basis or profit basis, but in my opinion, you should all really understand that. First of all, let's start with the Dixie. Everybody knows the Dixie. It's the dollar strength index, and since the beginning of this year, the dollar strength lost 10% compared to other currencies. So the strength index is a comparison between all the major currencies in the world, and the dollar lost significantly against several other currencies, and one of those is the euro. Another one is the franc, which is always usually kind of stronger than most other currencies, and also against the pound. And if you look at this, the whole almost 20 years since this chart exists, the strength of the pound went down. Same on the euro, since the euro existed. This chart is not as old, but ever since the euro lost a lot of its value against other currencies. And there's several reasons for that, because this is of course not moved by us, and this is moved more by banks and by whales. And banks, of course, they always are aware of currency fluctuations. The whole forex market is nothing else but currency pairs. But also whales are probably very strategic in taking profits and where they're going to put their money. If they rotate it out of the market, they have to put it somewhere, and it's not always that people or that whales are rotating into the dollar. And while the dollar was, since the financial crisis, pretty strong, even though every crypto guru tells you that the dollar is losing all of its value and it's going to zero, it gained 36% overall against other currencies, and this during a time of very low interest rates. So even though inflation was high, the dollar gained strength, and this is for several reasons, because it's used for oil. So every country that wants to buy or sell oil needs to do that in dollar, and so the dollar is the whole ecosystem has some kind of use case, we would say, in crypto. And also the devs are pretty smart in implementing their coin into the whole infrastructure of the whole system, because everybody needs oil all the time. So the dollar is very tied to the global economy, and as said, it gained strength significantly. 30% is a lot if you like a billionaire or something, or even a millionaire. And so locally, you need to be aware when to, in my opinion, or at least this is how I do it. Of course, I don't trade every 1% move and switch my whole holdings into another currency. But for example, if you bought the dollar more or less in February of 21, which was, of course, if we look at the crypto market and the market in general, this area here was the top, and we had a bear market into 2022, into late 22 to be more precise. And if you took profits from the market and you put this money into the dollar instead of another currency, so you removed money from the stock market and you put it into the dollar, you gained another 30% in buying power globally, which is very significant, of course, because first of all, you need to think like a whale. And I mean, as said, for a whale, 30% is massive, especially considering that it's happening within 1 year. And so the smartest move was to put your money into the dollar. And I mean, even a stable coin, which is tied to the dollar, is more or less a dollar. And so if you like sold the top, left your money in stable coins, you gain 30% in buying power. And right when the market bottomed, this topped because whales started rotating the dollar back into risk assets. And ever since then, it's wobbling around here, more or less ranging. But since then, the dollar lost 15% in its buying power against other currencies. And so you're not just losing if you, for example, if you don't sell the top and you ride the whole move back down, you lose, of course, absolute value. Like if you bought for, let's say, 1,000, you're still in the market, you lose 80% of that. I mean, you just have $200 left. And then consider that most people panic during the bear market, start selling their like deep underwater red holdings, and they buy the dollar. And they buy the dollar at the all-time high. So they lose twice. They're not just losing the amount of money they lost with their risk-on position. No, they also lost ever since. Let's imagine they never went back into the market. They just kept dollar. They said everything is a scam. I don't touch it anymore. Oh, yeah. Good morning. I do actually. Thanks for pointing this out. Good morning, Darren. You brought a friend to the group. That's nice. That's nice. He's waiting for Whoop to do its thing. Yeah, Whoop is unfortunately very slow with the crypto transactions. But we are still in the process of refining the whole thing and implementing real bank connections and all that. Yeah, sorry, I was showing the chart for a little longer already. Yeah, sometimes I'm a bit confused with all this recording and sharing the screen and blah. And so, but overall, I was just talking about this whole move here, which was this area here on the Dixie was the top for the stock market for risk-on assets. And if you bought the dollar here and somewhere close to this bottom and you kept your dollar throughout the bear market, you gained 25% from the low 30% in buying power, in absolute buying power. And you could use this buying power to buy cheap assets again because your dollars gain strength, not just against those risk assets, but also against other currencies. And right at this time, if you're a whale, you started probably buying into the market again, which was then, of course, late 22, which was a perfect time to buy. And so, as said, for people who who didn't sell the top in 21, but rather bought into the market, they sold their cheap dollar, more or less, for expensive assets. Then the dollar rose against those assets. For example, if you hold a shitcoin and it goes down 80%, you bought $1,000 worth of this shitcoin. You're down $800. You say it's all a scam. You start selling, and this selling you could also consider it buying back the dollar. And you bought the dollar at this high here, and ever since then the dollar lost 15% in buying power. And this is of course because a lot of people used those dollars to buy risk assets. And whales moved this chart most of all. And they bought into the stock market, they bought into crypto market, they bought into gold, into risk assets. That's why the dollar is losing strength, because everybody's selling the dollar more or less. And once you so you didn't lose just those 80%. You also lost, if you never touch the market again, you also lost 50% in buying power against other currencies. And of course, in a global economy, we all need products from like the whole world. You pay the price if you're not in the market. So everybody that's not in the market, this is like the hidden fee of inflation is that if you're not in the market, you are the one paying the price for those who are. So in my opinion, being in the market, and also just from an investment perspective, like those people do over decades for the pension and all that. If you don't do that, you are the one paying the price. And of course, as traders, we don't like passively invest, we actively invest. And so you should really think about when to hold which currency as well. Because if you're like acting globally, and if you, like most of us, buy products from all over the world, it's very nice if you, for example, sold your risk assets here. Let's imagine you made big gains in 2021 and then you bought the dollar, and we can also use stablecoins for holding the dollar, of course, but I wouldn't recommend doing this in the bear market, at least not with a big chunk of your portfolio. You gained 30% against other currencies. Then you bought, with the strong dollar, you bought into underpriced assets and so on. And you can do this over and over and over. But what I think this time, it's a bit different. Because if I remove this channel, you see the structure looks a little different. The channel is more or less creating a little bias. And this trend line certainly holds some weight, but it's like, it became a pretty obvious by now. And also we broke this low here. For now, we just did a bearish retest. I mean, there is this 5-month level, but I think this structurally doesn't look like very strong support, but this low does. And overall, we have a lot of liquidity left down here. So for example, a lot of people are probably aware of this, like the dollar is gaining strength, everybody's selling their risk assets, the dollar is getting stronger. This was also because they increased interest rates, and higher interest rates mean it's more interesting to hold the dollar itself, and also to buy American like government bonds, because you get very safe interest rates paid onto those bonds. And so this was a little different, and I think thinking that it's going to play in the same way again is maybe the wrong approach. I think we could see a relief, of course. So should the market top, should risk assets top, and I'm talking about the whole market here, I'm talking about stocks, crypto. Crypto is very big by now, so there's a lot of money floating around. And so this is all impacting this chart. So when people start taking profits, a lot of people hold American stocks and buy them on the Nasdaq exchange. So they automatically buy dollar. You can't, if you like bought your stocks on the Nasdaq exchange and you sell them, you automatically buy dollar. And this means this chart will probably relieve into whatever. But I think overall, if this structure doesn't turn more bullish, I mean, this is our next kilo and this is another 7%, which you lose in buying power. And should this not hold, because I mean, structural wise, I think it makes more sense that we go down here, even though I can't know. This is 15%. And you certainly, I mean, if you made good gains, or if you make good gains with this bull run and with this ball of top move that certainly seemed to happen right now, you might not want to hold all of your gains in dollar, but rather look at different currencies. For example, the euro. No sound. Ever have more people this problem? It's only him. Okay. I hope you can figure this out. Back to the chart. We have the XE here, which is the Euro Strength Index, which is the same chart more or less, but measured in the euro against those other currencies. And I mean, we're hitting supply here. So this could definitely react. We go back down, fill some FEGs here. And it's all against other currencies, right? But I think this breakout, more or less, we made a higher high for the first time since a very long time. Like a real structural higher high. A retest of this makes total sense. But let's imagine we fill this, which is more or less if I flip it upside down, it's probably looking a little bit like, I probably need to, a little bit like those, you see, it's more or less the Dixie chart inverted. So if you bought in 2021, if you bought euro, you lost 20% in buying power. So let's, for example, you're European, you are in the market, you sell the top, and then you hold all in euro. You lost against the dollar, you lost 20%. And this time around, as said, this is more or less the same chart flipped upside down, of course with small differences, but we broke this major trend line, we broke this low here. We're probably heading for this now. And if should this not hold, we have the same level more or less on the XE, which is then a 10% gain if you hold the euro. And while this, with small portfolios, this is all not so significant, of course, it's just 10%, but you need to think like a whale, and you need to think like your portfolio is big and on size, because first of all, at some point, if you keep on trading and if you keep on improving, it will be. And so you really want to understand this, in my opinion, because otherwise you just miss some parts of the game. And this brings me to point number 2, which is understanding those currency rotations is not just good for your own portfolio and knowing when to hold which currency. It's also good to understand those global connections and connect the dots properly, because as we saw and as we see lately, a lot of euro pairs are reacting or having better or like cleaner levels, even though this is more or less the perfect range high retest, but we don't look at those levels. And if you look at the ETH euro chart, we have this perfect 3-day here. So there might be something to it that not just I'm looking at the euro, but this breakout is probably triggered by whales shifting more into the euro. And consider that everybody that's now in the crypto market, and I mean, look at the market cap of stable coins. I mean, this is just, it's insane, to be honest. But where? I know this dominance. I mean, this is just USDT and USDC. I just combined them because they're the biggest ones. And I mean, we are 200 billion in market cap. And ever since 23, this is 22, sorry, this is more or less, so in 23 it started, this is up only. So an increasing number of people is trusting those stable coins. And I think there are 2 big traps. First of all, I think those stable coins are probably the CBDCs everybody is so scared of. The crypto space is funny anyway, because the dollar is going to zero. And as we see right here, that's definitely not the case. Since the inception of crypto, the dollar is basically going up only. And this makes people hold the dollar over other currencies, and it's so convenient, and a lot of people have no access to other currencies and no global banking systems and all of that. So a lot of people are going to use the dollar with those stable coins if they want or not. And so if you want to extract more money from the whole system for your own needs, as whale, you could make people use this, then nuke the value of the dollar against other currencies. So you gain value above all over all those people holding stable coins and holding the dollar. Of course, there's a lot more to it, because we're talking about a global economy, and as said, the oil price is also in dollars. So every nation needs to buy and sell oil in dollar if they want or not. And so this is of course a lot more complicated than I'm explaining it here. But as said, from a weights perspective, just from a liquidity perspective, this is people piling into the dollar using electronic cash. Even though everybody's so scared of CBDCs and total control, I mean, stablecoins are they can be controlled totally. Your funds can be freezed within seconds. Every transaction is seeable for years and saved. So this is really my opinion, this is the CBDCs everybody's so scared of. And one of those will probably be the digital euro. And people are happily accepting them, because it's against the system and it's crypto and stablecoins. But I think the whole crypto agenda is more or less made not just to extract people's money, but also to make people accept this kind of cash. Because 20 years ago, nobody would have trusted the internet with their whole life savings. And nowadays people are happily buying stablecoins, and you see this is up only. I mean, we had heavy corrections during the way up from 2020. But this chart never corrected even once, so not really significant. I mean, this is just sideways. It went not even down here, and yeah, it's almost vertical. So a lot of people using those, and from a liquidity perspective, it makes total sense to nuke this chart down here, because this means everybody who's not holding those will gain value against the dollar. And then, of course, we have also the uncertainty of we don't know which one is going to survive. I think my best bet is on USDC because it's backed by Coinbase and regulated, and a lot of like global financial players are already more or less integrating USDC, or at least talking about it. And so I think USDC is probably the winner of this. And I don't know if USDT is going to be imploding. But of course, this could also be a trigger of this here. And so be aware, stablecoins are not what they seem to be, in my opinion. And if you hold a stablecoin, you hold the dollar. And if the dollar loses value, you lose value as well. So maybe gain access to a global bank account, which allows you to hold different currencies, because as said, some charts here make higher highs on a higher time frame basis. And this is the Canadian dollar, by the way. Doesn't look so strong, does it? But comparing to the pound strength index, it's also breaking out. It's not making any, I mean, taking out this high will probably be the first real change of structure. But yeah, it's definitely looking stronger than the dollar does. And so for me, it's going to be different currencies this bear market. It's not going to be a lot of dollars. And I just wanted to cover this because this is really what is the global market, and what connects the global market is the major currencies, and whales are using them and playing with them. And everybody not aware of the market and of those currency rotations is paying the price more or less. I mean, as said, with a small portfolio, 10% losses, it's not that insane. So you won't be devastated about that probably. And you won't even feel it really, because if you live in your country, prices are usually stable, depends on where you live. But then you just buy, for example, you buy eggs for $3 or $2, and you just pay $2 in a year from now. But of course, if you hold your dollar, and if you're a trader and you won't like buy risk assets globally, those 10% might affect you buying power in the bear market. And so let this sink in, wrap your head a little bit around it. I'm going to write a post about this as well, because I think it's more important than people realize, especially because it's just another puzzle piece to see what whales are up to. And yeah, I mean, we wanna track whales' footprints, and this is definitely one of their biggest footprints they leave, because they are certainly not holding shitcoins in the bear market. They are going to use currencies because they have real businesses and they want to have like real buying power. And crypto is 90% of crypto is just a joke anyway. And so it's time to lock in gains soon, in my opinion. Big gains probably for some of you, and think about which currencies you want to hold. Makes probably sense. Okay, you can ask some questions about this if you have some. Other than that, I'm going to cover the range or the Fib question topic on ETH. I'm not sure if you are here. Was it you, Mark? Did you ask the question? I'm not quite sure. But anyway, the question was, which Fib should he use? Should he use this S-swing? Or should he use the full swing? Because like it's deeper in discount, and there's the 618. And if I use this, it's barely in discount. And the thing is, I could always use whatever I like, and I could force the Fib like I want to, and just so it fits my bias. So it could also go to lower time frame, and I could say, oh, this is a swing, and I just go to this high, and then it's deeper in premium and discount or whatever it is. But the thing is, we are really interested. So the Fib tool is nothing else but a range measurement tool. And what is our range here? Our range was, before this move yesterday, our range was this. So we measure the range like that, range high, range low, because a swing is nothing else but a range. Let me remove this Fib. right? So range high, range low. So we say, okay, this is right equilibrium here, and everything above is premium, everything below is discount. Of course, I could also define this as range, but if price is up here and I want to trade a local trade within this little range here, if I go to low time frames, this will be a range, more or less. Then I could use this fib, but if I take trades from the range low somewhere, I want to see what the whole range is telling me. And from this swing up above here, we are in discount and premium. And so the same way I did it here, we can now apply the same kind of thinking here, because we had a whole move to the upside. So this is our major low and this is our major high on this time frame. And so why would I use the smaller swing if I'm looking to trade this whole range here? I want to see, so this is my most important fib, right? Because this is the swing low, this is the swing high, this is the whole swing. And according to this, it's in discount. And of course, the deeper the discount, the last liquidity of the range, we have an order block here, and we have certainly some hidden liquidity within here if I want to skip through that. But it's in discount. So this gives me +1 confluence. Also, the 0.5 is close, and I can include the 618 for my stop loss, which acts as barrier. So the whole thing is valid itself. Now I can add 10 different fibs. I could say on lower time frame swings and this and that, and a counter trend fib and whatever untested fibs. I can force my buys like 10 hours long and have 10,000 fibs, but do they really help me in any way? I don't think so, because I've already seen that this whole thing here, it's in the discount. I have a major fib here, the 0.5 is very reactive, the 618 very reactive, it's all around my level. I will probably be very happy just by doing it like that. And then the next question was, or the first question actually, what to target. And I always target the range high first. So this whole thing is a swing, and I won't target 5K, even though I think 5K makes a lot of sense as psychological number. I just target the range high, because it's a range until proven otherwise. As long as we don't break above this range, there's no reason to target anything higher. I mean, I will probably lock in some gains here, 20 to 50%, depending on several factors. And then I have the rest. I can trail the rest. If it breaks out, great. I can push this trade even higher. And if it doesn't break out, I'm just locked in gains, get stopped at break even most likely from there. And yeah, that's it. And this is more or less range philosophy, range trading, range knowledge. In my opinion, the Fib tool is nothing else to measure a range. And the same way we do it here, we do it on the whole swing, we do it on all swings. And of course, as said, for example, right here, I've also measured this swing. Why? Because if I trade in the context of from here to here, this could form one big range. We don't need to break this. So if PA starts, let me get a clean chart. So this looks better. So we could form a big range here. We don't need to go below this. As long as this holds, there's no reason for me to believe that price is going lower, in the same fashion that I don't think it's going higher. Same way I think at this low, as long as this low is holding, this is my swing. If this low is breaking, this is my whole swing. Next. You see, I come from this upper range. Oh, let me draw some ranges. It's probably better. So this is my range right now. And as long as I'm within this high, within this high and this low, I treat the whole thing as a range. So if I take setups, if I take longs, I want to take them in discount, right? I want to take them below the 0.5. If I take shorts, I want to take them above. And if I take this setup here, I want to sell into premium of this swing. And so this is my premium of the swing. And of course, if we smash the range, if we go higher, great, perfect. I can trail this trade I can make even more money, but I've locked in some gains because I just respect the range. Because we could also, price doesn't need to trend aggressive like this all the time, even though I think it will. Doesn't need to, so it doesn't mean I need to be right about that. And it could also indefinitely keep on ranging here. So wrap your head around this, that the market doesn't need to do anything. It just does what it does, and it could also range. And as long as this high and low is respected, there's no need to expect this to break. But if we go higher, if we go lower from here, for example, like breaking this range low, my new range becomes this then, which is the 0.5 is here, right? Everything below, like this little area here, is then a good area for taking longs because it's in the discount. But again, why would I target anything higher than that? So if I take, for example, let's mark out this just real quick. There is something, I promise. And we take a setup here in the discount of this range. We target again the range highs. We don't target anything above. Why would we? There's really no reason, because this is the premium of this range, and of course I want to sell the premium of this range. And the same thing is for here. See, wrong tool. This is then my, should we break the range, the smaller range I've drawn here, like breaking this swing low. This whole thing here is in the discount of our range, and again we have some levels here, I promise. I can do the same thing all over again, taking along here, targeting range highs or some new formed liquidity within the premium of this range. So of course, if this is my range high, should we just break every range, every low lower, and we create this big range here? I of course can target the range high, but if there is significant liquidity forming on the way down, I only target this. For example, if this is the green thing is my liquidity here, I target this, which is in the premium of the swing. So no reason to think there's a moonshot going to happen. As long as we don't break this range, I'm trading this range. And then we have, should we break this as well, we have the last range, which is the full swing, which is of course the most powerful one. Why? Because it's the biggest one, it's the most high time frame, it's measuring the whole swing here. So everything below here is most optimal. Within this whole context of this whole range, of this whole swing, everything below this 0.5 is most optimal. And so if price should break further and further down, all of that here, according to this whole swing, is not optimal. Why? Because we are in premium of this whole swing. This is the most important one. So every setup I take here is not most optimal. I don't buy spot. I don't buy on big significant size. I mean, significant, yes, but not like I would down here. And the same thing, the lower we go. So we are in every range here right now, in every range besides the smallest one, the first one I've drawn, we are in premium. And so the setup here is certainly not optimal. And even though it's offering 4R to the highs, it's still not optimal because it's in premium of the whole swing. Weights are distributing here, they're not buying here. And even though we could go higher from here, it still doesn't make the level optimal, because is not a certainty. It's a possibility, sure, but we want to manage risk as good as possible. We want to lock in gains as good as possible. So according to this whole thing here, it's in premium. Only from this one last range here, our last swing, it's in discount. That's why we can take it. That's why we can take a local trade here, but it's not a swing trade idea. Then should we break this down, we are still in premium of this biggest range here. We're still in premium. So this is a little more optimal because we come closer to the 0.5, but it's still not really optimal. Only once we broke this and we go for those levels, I think here's one as well. This here with the 0.5, it's equilibrium of this biggest range of the whole swing. This gets more optimal, and everything below here gets very optimal, especially down here, of course. But again, we need to listen to context, because once structure is breaking down, we are trading against higher time frame trend, which makes all of those trades riskier, but of course at some point the whole edge is a reversal edge, and here on the way down we also try to catch the reversal, which is also we trade against the higher time frame downtrend, and this is what confuses people. But if the level is most optimal, and it is, if I look at this whole range here, it was sentiment, all of that, the whole thing, and according to this whole range here, it was in the discount, and so this was more optimal. And of course, if we go all the way back down here to all our ranges, to the lowest, to the deepest discount here, those levels get more optimal. But of course, if you understand the whole context and that the market moves in cycles and that we're probably at the end of the cycle, all of those trades need to be treated as counter trend trades, because it's probably giving nice reactions, but it's not giving us new all-time highs, and that's why we just traded to the range highs or into liquidity. And you can take nice swings there. Those trades can also play for a few months or weeks. For example, if you like took this, which is again, we can measure this again. First, you were up here in this range, in this one, in this one, and we broke that down. So we opened up the bigger range, which was then from those lows to the highs. And while of course, you can trade those, probably here's something if I look long enough, you can trade those reactions, but don't expect moonshots from here, especially because structure is turning against you and the whole context and cycles and sentiment. And then we broke this low, so we opened up the bigger range. And in this range, this was also in discount, right? So from this whole swing here, you could take trades here. And I mean, those are nice trades. Don't get me wrong. This is a nice counter trend trade. But you need to understand the whole context thing. And if you take this trade here, you measure, of course, this swing right here. And the 0.5 was probably not the worst choice for a TP, because the whole thing went down and we retraced perfectly to the 0.5. So you can take longs here, but of course you need to understand the context, and then you lock in some gains. So you take a trade at the discount and you sell it at the equilibrium or at premium. Don't expect moonshots if the context and structure is against you. So right now we are aligning with structure. This makes the setup a little more optimal. But as said, looking at this whole chart, this is certainly not the time when to look for big longs. The time for big longs was here or here. But ever since we crossed the 0.5 of this swing, now it gets a little messy probably, so I delete some things. Like the 0.5 of this swing, ever since we crossed it, we are in higher time frame premium, and higher time frame premium is not what we want to long on size, not what we long on spot in my opinion. We long and we buy spot in higher time frame discount. And all of that, so the whole question, now I remember it was Mr. Cool, hello by the way. The whole question of which swing is more important, in this little area here, it's just swing low, swing high. Don't overcomplicate it. You can force so many. I could force, as said, in lower time frame, I could force 10 Fibs and I could force my bias onto the chart and say, wow, it's in such a deep discount. But overall, understand the whole context where we are. Understand the higher time frame context. Of course, we align with trend. There is a nice level. Order flow is probably also aligning for this level. So it makes sense to trade this, but understand the context. And as said, it's not so important if you use this or this. I would just go for the whole thing because this is the range. Why would this be the range, right? So this doesn't make any sense. Why would this be the range? This is the range low, and I can't give you a rule for that, but it's just, in my opinion, it's just logical thinking. This is the range low, this is the range high. And within this range, you want to take setups around the equilibrium or below for longs. And you want to take shorts and sell at the range high. And this is basically Fib knowledge, is range knowledge. And in my opinion, if you understand the whole range thing, the whole range concepts, this becomes then very easy. And as said, I can, if I go to different timeframes, I could draw 500 million Fibs during the swing, but are they really important? I don't think so, because the most important one is from here to here. then we have this to this, then we have this to this. So I also see no reason to measure this fib and to measure this. Of course, as said, I could force my bias, say, wow, there's a 0.5, I want to trade this. But why would I? Of course, this was a range once before, but with the breakout, we created this range. And this is what makes sense because range low, range high. And if the range low breaks, of course, then we are in the bigger range. Same way on the way up. So for example, for quite a time, this was the range. But since we broke it, since we broke above, closed above, went higher, this is not the range anymore. This is now from this point. Does this make sense to you, Mr. Cool? Perfect. Okay, guys. Any more questions? I'm not quite sure if I get this question. I just going to read it out loud for the people watching the recording. Do you ever use Fibs on the overall range? I was mucking around today with Fibs and found that some strong levels align with on the higher time frame range. I know, let me share screen. It will make sense. Yeah, okay. Please show me something because I don't get it. I also have an interesting chart from Doge, which I can share about ranges. People usually like this chart. No. Yeah. That's it. So, range knowledge, quick again, once again. So this was our bull market high, right? This was a bear market low. The 0.5 is in between. So if I want to buy Doge, so if I bought Doge, let's say you bought Doge here because I understand demand, and of course, if I now draw a fib here, you see ever since we lost 36 cents, we are in discount of this old swing, right? So bull market pump, retracement below the 0.5. I mean, I would probably not start scaling in on Doge around the 0.5 because the meat of the move was still coming. But it was ever since here we were in the discount. And then if you bought in this discount, you think about, okay, when should I sell? And then you measure, of course, this whole swing. So this is the new range. And you TP into the premium. So if you had Doge, you should have sold during 40 cents. So all throughout this. If you haven't, you just didn't sell in premium. And this is the price you pay if you don't sell in premium. Because if you always think everything is going higher, making new all-time highs, you will always be left back holding. So you buy discount, you sell premium. It's that simple. And if you repeat this process again, and again, it will be very profitable and lucrative. And I sold most of my Doge for 40 cents actually. And of course it went a little higher. And then you think, oh, I did a mistake and blah. But overall, I think it wasn't the biggest mistake. And you see, then we formed this swing here, right? So we went down. You maybe think, okay, I can rebuy some Doge here for 18 to 15 cents or something. And then you have a new range formed. And the 0.5 is right here at 30 cents. And we are in discount of this still. So why would I sell too much of my Doge? I sold some here. I bought all of them back here, even some more, because I made a profit and I added all the money back more or less. And why would I take profit on my spot if it's in discount of both of those ranges, you see it's in discount of this and in discount of this. So this is a very green area where I try to accumulate longs. Once we reach this area, I don't look necessarily for big longs anymore. And also I start selling into this. I mean, we have some levels here, we have supply here, so I'm probably going to sell some spot here. I mean, if we do this, of course, if momentum is just not fading, we go up in a straight line. Why would I sell until the momentum is intact? But other than that, if you start ranging from here or something, I will definitely sell. And I will definitely sell into this premium here, regardless what the momentum says, because we have supply here, we have supply on the BTC, Doge BTC chart. And why would I expect this? Even though I think this could happen, why would I be a bag holder and risk retracing 80%, 90% of my gains if we are already in higher time frame premium? I will do the same thing again as I did on 40 cents. And if this is going to be a higher time frame 3 drive, which from a timing perspective, 245 days. From a timing perspective, sorry, it's June 25. No, this doesn't make sense. Here, which brings us to, oh, it's already gone. It's already over. But I think this could definitely, could definitely happen, and I sell into the premium here regardless, and I would start with that probably here. Momentum is fading. And this is, again, range knowledge, fib knowledge. Of course, you have a lot of you have a lot of minor fibs and minor ranges. And of course, if you trade within them, within the context, you need those. But again, the bigger ones, so the major ones from this low to this high, and from this high to this low, and from this high to this low, those are the important ones. And everything you do should be aligning with them. So you should look for bigger longs in discount. You should sell into premium. And everything you do in between is in context of this whole thing. So take it from top to bottom. Don't start your analysis on lower time frame and get confused of all the swings. Start at higher time frame and look what makes sense. And if you understand the context, you manage your risk around the context. Glad it helps. Slide fingers. So we have this key swing high, swing low. If I pull this range to level I'm interested, as well as multiple fibs on the daily swings, do you use the overall range fibs as confidence as well? I think that makes a bit more sense. Oops, ignore caps. Yeah, don't shout at me, please. In this case, yes, it makes sense because those two highs are basically the same key swing high, swing failure pattern. But the area you're interested in, I would measure from your little point, higher low, key swing low, to the most recent high, which we broke now. So we broke above this. Makes more sense to me. But of course, they are both at the same level, more or less. So you can use like the first one. And it's still one big range. So it makes sense. Sometimes if the second high is higher, I would definitely use this because, of course, it extended the range to a higher price. I hope it answers it. Yeah, the more fibs align, the more confluence, right? This is true. And if I, for example, take, this is what I mean, but we are in discount of this range, we are in discount of this range. And now if I go into a local view and say, okay, I want to take some longs here, and it's also in the discount of this last swing here, it's a good area to buy. If you're not exposed, if you look for longs, it won't be perfect. We haven't hit like a level we all looked at, which is a little lower here. But definitely, this is a great time to buy. You are in discount of the discount of the discount. You know what I mean? And now we crossed this 0.5, or I need to drag it differently, of course. But we are at the 0.5, so we're still technically, now we closed above yesterday. We're technically not in discount anymore. So from here on, it's not the greatest time to buy. But of course, if you retrace into a low level, which we did into this daily here, it's according to this, again, in discount. And if I draw this, it wasn't more or less it was the equilibrium, right? So this level was not too bad overall, even though oh no, sorry, this is I drew it wrong. This was in premium. Sorry, yeah, no, it's right. So this was not the best setup to take according to this, but it was a good setup according to this swing. And of course, from our major higher time frame swings, we are also still in the discount. So looking for longs here makes sense. And as said, once we cross this, we are still at a discount of this bigger range. So that's why it's overlapping here. So this is like the gray area where it's still premium of the swing. Makes still sense to look for shorts and sell. And of course, once we go into the high red area, supply here, premium here, supply here, you should definitely lock in big gains and don't think Doge goes to $3. This is just not very reasonable. And the same thing, like here, you can apply this to every time frame. So it's the same thing on every time frame. Just be aware of the higher time frame context because it rules over lower time frame, of course. I don't know what's with the sound today. I think I paid Discord too much money. Looking at the overall situation of the quality of the streams sometimes. Sorry for that. Sound is okay here. Yeah, sorry, I can't change that for you, unfortunately, Mr. Salad Fingers. I hope I answered your question. As said, now that it's tested, I'm not necessarily looking at the whole 705 as big confluence anymore for this particular level because the level is taken, the 705 is taken. But it's still, of course, as a range measurement tool, we are still in discount of this range, and this is what we measure. And when it aligns perfectly with a liquidity level, you have all you need, you know. So of course, as said, you can measure from so many points, but this is also a little intuitive thing. So just understand the whole range thing, and where you need to draw your fibs, you will understand it very. So it will become very clear to you if you understand what I explained today. It's your headphones, yeah. For your headphones, I can do nothing, unfortunately. You asked something. Sorry, I haven't seen that. Hey, NC, can you express your view for all-time high in Ether? If we see the 1272 Fib level and you're currently rejection no daily close above, would you be targeting higher Fib targets for the same? So regarding ETH, I think so. As best case target, this is my target. Front running the 6K level, something like we front run the 4K level, but I could also explain 30 minutes why it makes sense to reclaim this as psychological level or to take this ETH above 6K is also a good headline. And because people got front run last time, which wanted to sell 5K, it would make sense to touch the 6K level. Just that this time it seems like we're going higher or something. So as said, I could explain 30 minutes for one reason and 30 minutes for the other possibility. And everything will make sense. But the thing is, what is most likely? So I think most likely we see a little bit of a bigger swing failure pattern. I don't think that this very big green candle with some levels inside is going to be retraced without creating more liquidity and taking out shorts, because like I shared this morning in the order flow channel, so the first part of this move, this was just longs opening, big longs, so it makes sense to like take them into those key levels. But ever since here, a lot of shorts opened, and where do they have their stops? Of course above this high here somewhere. So taking them out, reclaiming the 5K level, this psychological level makes so much sense. And I don't look at the 1272 or whatever. I like those negative fibs on higher time frame, money tower fibs, and I just think in liquidity terms. So like the same thing, I knew that we are going to smash this just because it like reacted 3 times and it's a psychological level, and lots of people haven't sold this, and the 4K level was the level of doom. So reclaiming this was probably one of the most bullish things for the whole market, or at least it makes people bullish. And sweeping this in a little broader fashion makes also a lot of sense, because usually if we sweep the all-time high, it's usually a little more than just this. Just because, I mean, people probably don't trade their higher time frame shorts like this, but rather something like this or so. But for 5K is a good barrier for them probably. Even though it doesn't mean anything, it's just a liquidity level because it's a psychological level, and lots of people think probably 5K is a hard level to reclaim, even though it's for whales, it's more logical to smash it this time around. So yeah, this is what I think to ETH. As I said, I have no clue about the 1272. But of course, if it makes sense to you, and if you have it back tested, and if you see, okay, it reacts kind of nice all the time, especially on ETH, why not use it? I think these are probably telling a good story. And then you have those psychological levels here, 5K, 6K. Yeah, and there was this other question about, I think you asked also about PTC, Mr. Cool. And this is, of course, according to the swing, this is in premium. So this is not a good level for me personally. And then as I said, I can always force my bias somehow. So let's go to the 5 minute and say, great. It's not even possible to force it here, to be honest, because this doesn't make sense. This also, I mean, okay, we could treat this as range and say, okay, we are at the range low and there is liquidity. And as said, I could explain like 30 minutes why it makes sense for us to reverse from here, but I could also explain 30 minutes why it's not reasonable to do this and to expect this. I mean. And as said, for me, there's only one way to draw this fib here, and this is definitely in premium. So if you want to have a higher win rate, I would wait for the discount levels, which is also, there's more levels. There is this big demand. There is a lots of levels inside. So it probably makes the most sense if you want to have a higher win rate, and if you're not looking for trading every single level you can find, you should probably wait for this. But of course, this could never come. So, and if you want to have exposure because you missed out to buy in the discount, overall, you bought nothing or something and you want to gain exposure, you can, of course, try this, but just be aware of the context here. We are at higher time frame premium, and we are in this little range in premium. So if you trade this should be a high risk trade, so you should risk, of course, less money. Smaller position size overall, but of course those levels can be traded, and as said, makes sense, could react, could provide a pretty good entry. And if I look at total and stuff like that, as said, I can give you always some reasons why you can take this trade and why it will work, and I can always give you some reason why it won't work. In the end, it's probabilities, and there is a case to be made that this level could work because of this. Then I could say, okay, good, now it won't work because of this. And I can do this for like 2 hours straight, and in the end the level hit and I didn't take a trade and it reacts. So I can also just take it because there is a level. I have a certain win rate on such levels. It's lower if I take it in premium. but I can trade them, lower risk, and let's go. It depends all on your style, and it depends on what you're aiming for and what your whole situation is, because I treat the whole market as one big play. So I see all my crypto longs and all my risk on longs, like stocks and something, more or less as the same position in the same direction. They will provide me with different gains or losses. Like they're not all moving perfect synchronicity. Why would I take different positions then? But of course, overall, they are all moving together somehow. And as said, I treat my whole portfolio as one big play. And for me, it doesn't make sense to trade this semi-optimal level right here, because I caught some momentum longs yesterday. So I'm not very eager to take a stop here right now. But if I hadn't got any longs, for me, it would be a reason to say, okay, good, let's try this. The worst thing that can happen is a stop. And the stop doesn't kill me. I trade with less size because it's in premium. And then the stop won't kill me at all, because of course, as I said, it's even it won't hurt as much, because the position is probably pretty small in the end. Yeah, so it all depends on you and your situation. Before ending the stream, could you express your idea with regards to the next day's possible moves, also considering the content of Elon's post, like new rocket launch, which should happen on Monday, if I'm not wrong? I'm not the Elon study guy. I really don't like basing my trades on such things, because I mean, he posted a bear yesterday and it made probably a lot of people bearish, and I mean, we had the biggest moonshot. I mean, look at this candle. I mean, this is probably the biggest daily candle since here, and it's even bigger than this one. So what I mean, if you don't have any data, and if you don't understand really what he's saying and what he's trying to do, and you need to consider that they won't make it easy for you. He's not here to help us. Elon is probably behind some of those big coins, and he's not here to help us win. He's probably on the other side of the trade. And so why would he give you clean signals so you can understand them? So in my opinion, you need to study this really, really, really hard and collect a lot of data and really understand him and his mind before taking trades based on this or making assumptions. He posted this rocket launch. I mean, I think it's tomorrow he launches a rocket. And this is not just, in my opinion, it's not everything is about the market. It could, of course, ignite. I mean, a weekend pump makes sense to make retail bullish because retail has time on the weekend. But it's just so much noise, which you need to filter if you look at all of this, and if you like try to base your analysis on that. I look at this and I take some notes in my mind, or take some real notes. But overall, I don't trade based on this. And I don't really care what those guys are saying, because as said, they're not our friends, and they will try to mislead and misguide. And they know that there are puzzlers out there who try to decode all what they're saying. And so they leave some breadcrumbs, but they also leave a lot of traps. And I think those bears lately were the traps. Now with the rocket, you could say, oh no, but he's telling us. And also Ditman is telling us more or less. But they nourish your bias for just as long enough until they can create the next trap. And then they nourish it again for a few times until you have forgotten that he was trapping you a while ago. And also this kind of analysis of every number that a whale posts is important. How many levels did you short, or did you need to short based on what he said is posting his numbers and blah? And yeah, it's just in my opinion, it's just nonsense. Most of it. There is something to it, but as said, I think you need a lot of data before making your analysis based on that. But overall, what I think about the market, anyway, is that as said, it makes sense that we sweep this high. It makes sense that we do this on the weekend, but as said, I could also tell you that on the weekend, fear works best. I try to keep it simple. I just know that on certain days, certain things make more sense. Like on the weekend, euphoria makes more sense, but also fear makes more sense, because if you have more time to stare at the chart and you're fearful, you will make stupider decisions than if you're like completely busy the whole day. And so they know this. It's all about mass psychology. And so this is why the weekends are important. Sometimes they're pretty fearful, sometimes they're pretty euphoric. So this was no coincidence that the whole thing pumped into Friday evening or Friday night, because a lot of people are going to party on Friday, and there are festivals, and it's summer in the Northern Hemisphere and all that. And a lot of people are distracted and they're partying, and then you're drunk and you're like, oh, it's pumping here finally, and ETH is going to 10K, just buy some more because it makes so much sense here. All those things are important. And just from a liquidity perspective, as said, I don't think this doesn't look like the typical like double top, especially because the candle wasn't big absorbed after this touch. So I think, and also those shorts and order flow. So I think we have another spike. Will it happen over the weekend? I don't know. Makes sense. And I think timing wise, we are pretty late. So we have maximum 1 or 2 months left, in my opinion. So a lot of things are going to unfold over the next weeks, and it's going to be so fast, and it's going to be so messy and noisy, that you need to be really grounded. Either way, it doesn't matter if it goes up or down from here, because if it goes down, you should probably sell some of your things if structure's breaking, and it's not happening. And if it happens, you need to be even more disciplined, because you will feel like a genius, you will feel like you're going to make it. And this is the point where you should lock in those gains. Even they are not as big as you probably hope for, as we all hope for, because usually the market is not that kind. And so this is how I prepare for the next sessions. As said, I can't know either, but to me it just makes sense. I could see that we take those levels and then rip out of here. And considering Elon Musk's, like, I think that tomorrow will be important. So this is like the same way I treat the weekend, like saying, okay, this is important because retail has time to think and time to be emotional. I think he's giving us those dates, but it's not necessarily what people think. So the rocket might be bullish, the rocket might be misleading. Then here's posted the bear with a rocket. But I definitely think that tomorrow will be important in some way. But important could also mean very boring. So you see it's either going up, down, or sideways, and I take it by level. And if the level comes, I'm long. If we go higher, I'm going to sell, especially if we go higher on altcoins, if we reach premium areas on my bags. I took some momentum longs, probably TPing here should the momentum not pick up speed again very soon. So for example, on ETH, I look at this. So I know that a lot of shorts opened into this last move here. So there's liquidity above. So if you reject from here, I don't short this because I don't trade lower time frame on the weekend. And as said, we have liquidity above. So order flow is not aligning for this. Should we reject from here, I will probably TP on my momentum longs, which I took yesterday. And should we like reclaim this, I don't see a reason why we wouldn't go higher from here and maybe even go for the 5K level. But as I said, level by level, and this area here, this whole sell-off area is very important right now, and we're hammering it, and there's this 15-minute and blah and so many things. And so if this is going down from here, this is not giving a reaction at all, I'm TPing on my momentum longs. If not, I try to trail them higher. And I base everything on ETH, basically. So if ETH starts tumbling down from here, I TP on my momentum longs, and I try to catch some with those gains. I try to catch some here. And so, yeah. I'm not shorting ETH here. Just doesn't make sense to me, especially because BTC is still at the more or less in the discount of its swing. And I think if this hits, or even a third drive, I'm considering shorting ETH as well, but I'm not a friend of stepping in front of momentum, especially like this candle. The last time we saw such a candle, we had a few more left of those, and then we smashed it in the end. So tops take time to form. I don't need to short right now, because as I said, shorts opening with stops above these highs, most likely. The issue with Ethereum posts can be taken both ways. In hindsight, yeah. Definitely. So in hindsight, everything is easy and clear, and most people are just too biased with everything. And you can always explain your own bias with everything. This is what I mean. I could tell you 30 minutes why it makes sense that we go higher. I could tell you 30 minutes why it makes sense to go lower. I try to be prepared for everything. I don't try to be too biased. I try to shift probabilities to what I think is more likely. And I think more likely is that we have some more upside from here. So this is how I'm exposed. Yeah, but in the end, as said, everything makes sense. It's a market. Nothing needs to happen. And this type of uncertainty, this is what whales use with playing their game. So as said, I'm not a friend of studying those things too much. I'm taking my mental notes, but for what I've seen, the data is very messy, very unclear, very opposing, a lot of opposing signals, a lot of distraction, confusion, misleading people. Because as said, they are usually on the other side of the trade, and why would they help us? Elon is overrated just for confluence, not more. Yeah, right. That's exactly right. And also, as said, I think he's hinting a lot of things, and especially he's hinting important dates and something like that. But it's not for me that I want to take positions based on that. Definitely not. ZRO short. Yeah, I don't know. I don't even know this coin, to be honest. It's counter confluence, but the level as well. Yeah, as I said, you can trade everything. If you understand the context, you take a short, you take a quick gain. I also took, even though I knew price is going to go higher from here, I took some shorts on the way down, and I extracted some profits. Both got stopped at break even in the end after taking profits. Why wouldn't I do that? If I'm able to do that, if I have the skills, the level, the time, then I just execute if I want to, and if it works, it's great. I make more money than if I lose. So I can trade everything all the time. Even though I think, and this is context, even though I think higher time frame wise it's going higher, I can take lower time frame trades which pay me on the way down, and I can reallocate this money on the way up. But of course, if you are like getting confused from that, and if you trade lower time frame and this makes you higher time frame bearish, then which is, even though I'm very aware of myself, I'm very in control of my emotions and all that, it's hard. It's definitely hard to don't mix up those ideas and then, oh no, it's going higher. Oh no, I need to cut this short. Oh no, it's going lower. I need to cut my spot back, whatever. And this has nothing to do with each other. These are two different games. And I said, I don't know, ZRO, no clue what this is. I focus on majors because everything moves according to majors anyway. So makes no sense for me to split my attention too much. Is it riding the spike? You mentioned momentum locks. Is it riding the spike even without optimal entries? Yes. It's a little different strategy. If I show it to you, like on the high time frame chart, it looks like chasing. But so those aggressive moves, there is another strategy. I just don't have the time to cover it because I have to leave in 5 minutes. Especially in stocks, it works incredibly well. And in crypto, it's not working that well. And those things are very high risk. Of course, I have this running right now. I mean, look at this. And I took. Oh damn! It's a while ago. Probably I even closed the whole position by now. Where was this? Where was it? I think it was here. I took a long here on the 1 minute. I took a long here, and based on momentum and volume and all that, and you see, this is nothing. I mean, on the 1 minute, it paid me quite well. But if you look at this on the 1 hour, it looks like, okay, he bought the top. But with those signals, and especially like on low time frame, I just don't want to. Maybe it's possible on the 5 minute. I don't think the 1 minute. I will find it. I should have marked it out. You see, with the right strategy, you can. Oh, this one, right? Yeah. Look at the 5 minute candles here. With the right strategy, you can. Was it this one? Yeah, it's always hard to find it after. Yeah, I took this one, and you see it's like buying the top more or less, but with this momentum strategy, understanding the volume, understanding the order flow, you buy those micro retracements, and I lock in gains at 2R. I moved my stop loss to break even. Yeah, right, it was this one. I never got stopped, and I just stayed in this trade. I mean, I bought several shares of that. I would never buy this here. Don't get me wrong on high time frame, but then with my stop at break even, I took out some profits up here for 60, and ever since it's doing not so much anymore. I mean, it went to 80, and I think I have a few shares left. So this is nice to get in some momentum things. And on stocks, it works incredibly well. But on crypto, I burned my fingers a lot already. But it's all on low size because it's high risk anyway. But if you catch some of those, it can pay quite well. And especially if you missed out to buy the lows and you see a straight pump out of there, like we have yesterday, those aggressive moves target higher time frame. They don't target lower time frame. So it's oftentimes very easy to get in such a place. But this is high risk, and I don't really want to share this too much because most people probably burn their whole account with something like that. But there is more than one strategy out there, and I like to have different tools for different situations. Does it make sense to focus on Dino coins like ADA, XLM, and once ETH moves into price discovery? Like now ETH is at major spotlight of the market, capital rotation. Yeah, I don't know if there will be a rotation, but it makes sense. So just one everything pump, one little outperformance of shitcoins is usually when people get most euphoric, and around tops we want to see exactly that. Also whales want to see exactly that. Because they need buyers, and so it makes sense. And as I said, I could argue half an hour for this, and I could argue half an hour against that, why it does make sense, because people are so greedy anyway, and they don't need to do this anymore, blah, blah. We will see. I certainly don't buy ETH here. I sell ETH, and I bought some more short-term plays. I also bought Mara here, which is a Bitcoin miner, which is usually, if Bitcoin moves, performs a little better. Which makes me more or less exposed to the crypto market as well. And I see all my risk on plays as one big play. So I also removed a lot of my ETH gains from the crypto market and rotated it into into stocks, which of course obviously also pump, as we've seen yesterday, when risk pumps. So if there is a big risk on moment, a blow off top, it should be soon or never, in my opinion. Layer Zero's coin, I find very reactive, was comment based on Edel's bear post, blah, blah. Thanks, as always, Max. Yeah, I said I don't know this coin. If it works for you, why not? You can trade so many things. In the end, it's about what works for you. How do you manage to block when it gets bigger and bigger with every time frame you check? How would you place your trade? Yeah, if the level is pretty wide, I usually try to scale in. The most reactive area is usually the 0.5 of those areas. You have Fib confluence then, best case. And then I usually scale in, have a first order on small size at the beginning of the level. I have a bigger one in the middle, and then I have like one, which I do manually usually, which I can use at the lowest part of the level. So I usually have 3 scaling orders if the level is very wide, and I try to better my average into the level. But if I don't do that, it's usually around the 0.5 of the whole area. Okay, guys, that's it for today. I hope this helped you. You mean the 0.5 of the block? Yeah, of the whole area. So if you have like here, you can use every little block for the zero area from the 0.5 from your block. So you can, sorry, you can use every 0.5 from every block you have and see where most of them overlay. But you have this big area right now. So I will probably go for the middle of this whole area. And for the darkest part where you have the most overlaying levels, and you have a lot of, as it seems, a lot of at the top. So I would definitely have a scaling order at the top of this level, another one at the 15, 17, 18 hour, and maybe a manual one should we go for the lowest area part. But you only have one area, so you only have one block there, which is the 19 hour as it seems. So this is of course the weakest one, while the upper part provides the most amount of confluence. Yes. So if I scale and I take the whole area within my stop loss, and I would trade the position the same way I do. If I so like it's still the higher time frame trade. It's the same idea, just better my average into the level. I have not 3 different trades with different stop losses. This does make sense to me. You're welcome. Yeah, you guys have a great weekend as well. As said, I hope it was helpful. I hope you could learn something new. And as said, if you can't attend to the classes, we have now this live stream topic wish list. You can always post something in there. Maybe not too complicated things, because then it's better if you're like live here and we can talk about it. But if you have general questions and everything, just bring them there if you can't attend live to the class. Yeah, other than that, I wish everybody a nice weekend. Enjoy your time, and bye-bye.